Hey everybody, I wanted to drop a little video on MSTR, which is part of the ongoing saga of MSTR videos and trades that we've been doing, really trying to use skew and volatility to really inform our ability to find better trades with a little bit more edge. So while other people are doing cover calls and really kind of, I think at times really not doing themselves a disservice, I'm sort of looking at things a little bit differently, and it's been working out. No guarantees on anything, but it's been working out. Quick reminder that we are not investment advisors and that anything we talk about today should not be construed as investment advice of any kind. It is for education, entertainment, and information purposes only. Please do not proceed if you are not in agreement with these conditions. We had this really, really nice play in the low 300s, and you guys know the story. If you've been watching the videos, I had a skew signal that combined with a viewpoint on the chart, et cetera, and it really worked out great. We had a nice big trade up into that 360 level. It got a little bit higher, pulled all the way back down, and really I was thinking that I should probably rehook. We established this low and we bumped up into here, and I kept this spot here. I kept waiting for a little bit of a pullback because volatility, and when I say volatility, I mean implied volatility, the sort of level of pricing, the prevailing level of pricing, at least in the short months, the nearer term months, really hadn't jumped very much. And my theory, which played out here, which was volatile, the option pricing levels would jump with the stock. That is typical for this sort of Bitcoin complex. Now, when it came down, we did see the option pricing levels drop again. And at this point, they weren't really rising. So I saw something interesting happening here. We saw implied volatility stay relatively stable into this roughly 75 point move. And I thought that was kind of interesting. But of course, I think it's easily explained by the fact that we've seen Bitcoin really stabilize around $100,000, and we did dip below down to the low 90s again. And I'll admit that I kind of thought maybe we could come back into the 80s, potentially even high 70s. And that was part of the reason I put on that strangle, is I wanted to play both sides of the potential move. And it worked out. I leaned delta long into that move, and it worked out great as I wanted it to. But I gave myself that bailout, potentially a Vega bailout. That's one of my favorite strategies that is kind of my own creation, this Vega bailout, which it didn't need at that point. So, but it's always good to have that bailout strategy that can get you even on a position that you built and structured to make money long. So you create a long, and it goes completely wrong and you don't lose any money. That is a win in the world of options, particularly. So we didn't get this pump here because I think Bitcoin's been fairly stable, and volatility, as we've seen in the last few months, really reacted to this potential for Bitcoin to go really anywhere. It could have gone to 150, 200, who knows where, and MSTR very much reflected that. Once we established a level, volatility started to come off, option pricing came off, and rebounded as it should have a couple of times, because you get that volatility echo, and the recent behavior is going to repeat itself, which is we're going to push up upside skew and implied volatility levels into any run-ups in Bitcoin, because we just saw what happened here. So there's going to be this echo effect of a similar behavior in the volatility space. But once you get enough sideways movement and a little bit of a breakdown here, suddenly volatility starts to get used to a new regime, which is not a panic regime, but very much more of a sideways contained regime. And then it doesn't believe that it needs to price in craziness, right? So on this move here, it was starting to adopt this view that, well, we don't think there's going to be any craziness yet. So it's starting to adopt a we'll wait and see attitude. Show me first, right? Show me that either Bitcoin is starting to break out or MSTR is starting to break out. Then we'll start pricing in a little bit of FOMO, which is that upside that gets pushed up. The upside call skew gets jammed up, because that's when people start running in and panic buying, because suddenly anything is possible again, right? Remember, in the parabolic market, anything is possible, and volatility prices will reflect that. They will reflect anything potentially happening, and that means insanity in the volatility market. So that was contained until we got to the top of this level here, and I said, you know what, I kind of wanted to do it sort of in the 330s, because I saw that that volatility level was not rising, yet we were coming into Trump 2.0, we were coming into Elon right-hand men and all this other stuff. You know, we're going to have this crypto ball. We're going to have all kinds of things happening, which is you know bullish for the space. We'll have to see how that goes on Monday. If it's sort of you know, we'll see what happens, because Tuesday could be a sell on the news. We don't know. But so here's my recent play, which we did in the community. And if you're part of our community, you get these trades, you get these the thoughts that go along with it. I literally write thousands and thousands of words explaining to people what I'm thinking, why, what I'm seeing in vol, what I'm seeing on the chart, what I'm seeing fundamentally, what I'm seeing in skew. All this stuff goes in there. You are not just getting spoon fed the same old, same old. You are getting guidance. You are getting professional instruction. And that's a pretty amazing thing for the cost of the Discord, which I'm going to shut down soon because I don't want too many people in there. And we're going to start changing a few things over the next couple months. So your chance to get in is now. So I put this strangle on again. So what I did is I looked at the 270 put in April as well as the 460 call. And I want to show you how this looks here. So it's basically a position. A strangle is something you put on. They're very kind of important conditions that you get with this, similar to the one, if you didn't watch one of the earlier videos, but a strangle plays direction, but in a more agnostic way. You don't really know where the thing is going to go, but you're pretty darn sure that option pricing has bottomed out or is very, very near the bottom, because you always, when you're long options, you always have this Vega exposure. You can see right here around 369 when I put this thing on, Vega of 122. What that means is that if implied volatility drops a little more, if you don't make a good call and you get in a little bit early and this thing sits around and Vega resets, you're long Vega, you're going to get hurt on an implied vol drop. So you don't want to get into a lot of Vega when you're up here on the implied volatility chart. If you guys can see, the implied vol is the blue here. That's the option pricing. The green is realized vol. That just means, you know, how has MSTR been moving? And interestingly enough, we can see that it's been moving at a higher clip, at a higher rate than underlying pricing. So generally speaking, options haven't been super, super expensive lately relative to the movement out there, which is part of the reason I have been playing from the long side. Very, very specific conditions that you need, because most of the time, probably more of the edge is in those kinds of carry type trades where you have that volatility risk premium. Options a little bit too expensive in general, but there are going to be these wonderful opportunities that present themselves, and that's why you kind of have to be a two-way trader in order to be a successful trader overall. You've got to probably have a good chunk of those theta plays, but then supplemented and bolstered by some longer plays that make sense, right? So we got back down into here. We pulled back, not back down to the lows of when I had that last strangle on, but we pulled back down. And at this point, the skew was not giving me the indicator that it did last time. Right, so we looked at that indicator, we hit that zero level, and that was bang. That was the absolute bottom in MSTR back at 289. It was pretty unbelievable. Doesn't always work out that well. But this time it wasn't so much the skew indicator, it was the volatility coming down with some extra edge. So I thought the vol was low, the option prices were low given what was going to happen over the next little while. And we started to bounce off there, and we started to threaten this this sort of this kind of consolidation pattern here, if you want to call this kind of a flag or a pennant. I'm not even sure what that's called. But we started to get up in here. That was my signal. That was my signal, plus my MTI, which you get in all the programs that I teach. You get this MTI. That's sitting at a 4 green, right? So look at this. It was green all the way through this phenomenal run here. Look at where it got you in. Right here, at this point here, it gets you into the stock, right? Before that, everything's just kind of sitting around. You missed a bit of a move here, but this is where it gets you in before this explosive move. And then we sort of, as it broke down, we sort of sat in the yellow and red for quite a long time. And yellow, red, yellow, red, yellow, red, boom. Suddenly we get a 4, which is being dialed back a little bit by my volatility regime, which pulls us back, as you can see, -1 point. So instead of being a full, this is actually a full 5 green. Full 5 green alarm fire basically means this thing is looking fantastic. Pulled back only slightly by the broader cautionary environment that we're in from a VIX perspective. So, and other measures that we use in that. So here we are Full green. This is the day here. We're starting to threaten this upper trend line. I said, I'm not going to wait for this any longer. Bang, I got in there and I said in the chat, let me bring up the chat here. I mean, I've put out a number of comments on this thing. So there's no question that um, here we go. We're going to buy the April 460 call around 49.50. I ended up paying a little bit more for that, a little bit less for the put. We got the trade on for 74.40. So we put on the strangle for 74.40. Vol's not very high. I'm thinking we can go up and down. Now, Vega exposure, right? So Vega exposure is one of the things that I wanted as well, because I said if this thing explodes to the upside again, it's been reluctant, but it is going to explode higher. Boom, we had yesterday, nice follow through, and then and then today, which is really terrific follow through into the weekend. And guess what has happened? Let's take a quick look at we got April's on, so this you're going to have to look at. Make sure you always look at the right tenor of implied volatility. You can't look at 30-day if you're trading 6-month options, right? So you're going to have to look. I tend to look at 30-day as a general guide of what's happening, at least in the near term. It's going to inform some of the other parts of the surface, not necessarily perfectly, but we can see here that if we look at when I put this trade on, implied volatility was 105. Where are we today? We are 114. So look at that. We've had a 9-point run. 104. Wait, we went from 104. Yeah, there we go. 105 to 114. That is a 9-point run. So if you look at the P&L, we are actually on this nice move. We have to remember that we basically created a position. I leaned long into this, right? So this is a position that I wanted to go up. This was not neutral, where you can often put these positions off with a sort of a neutral delta, which means I don't really know which way it's going to go, but I'm pretty sure it's going to move. And I think that implied volatility is low enough that I'm not going to get that Vega hit, meaning volatility is going to come down further as I wait for my outcome. So I leaned into it because of all the things that I've been talking about. But you can see delta of 27, not massively long, but long enough that this thing was going to take probably, probably about $80 to correct and start to make me money again to the downside. So this is definitely leaning long. And what we can see is that today we are up. I did a calculation. We're up about 1450, so 1,450 on the position. But it is not from being right on direction fully, right? So let's take a look at this. We were long 27 deltas at the outset. This calculation we're going to do is not a perfect calculation, but we're long 27 deltas at the outset. The stock is up $22 from where we put this thing on. That's $594. So 27 times 22, $594. But we were also long 122 Vega. 122 Vega. So we didn't, if the volatility didn't go up at all, we would have made about $500 on direction. That's delta. That's your exposure to the direction of the underlying. That's what delta. It's one of the great things of delta. It tells you roughly where you stand from an exposure standpoint to a move in the underlying. So we should have made about $500 from a move up in MSTR in the stock. But why did we make a bunch more than that? Why didn't we make about $1,000 more than that? Well, look at our Vega exposure at the outset, 122 per vol point. Remember I said volatility was going to go up if we exploded higher to the upside. And that is what happened. But we made 9 vol points, as we saw from that vol chart. And I did look at the vol chart for that specific out of the money, for that moneyness that I was exposed to, which was about the 40 delta, I believe. Time 122, because Vega tells us what we're going to make per move, 1-point move up or down in implied volatility. So if implied volatility had dropped in those contracts that I owned, I would have lost $122 per point. But because it rose 9 points, I made 1098 on that. So you add 1098 to the 500 and odd whatever, and that basically gets you to where we are, which is about $1,500. So very interesting kind of way that this played out, and it's important to know where the torque came from, right? I always talk about this in my videos and with my students. I say, listen, you got to know what your torque is at this point. In a low vol environment, it might be more theta, a little bit of delta. In a high vol environment, it might be a little bit more delta and gamma, right? Those are the things that are going to be happening more for you. Those the movement. In a low vol environment, it's time. You can't speed up time, and theta is just the erosion that comes from time. But in this case, we have a benefit from delta, which is direction, and we have a benefit from the increase in vega. So nice to know where the P&L is coming from, if only to learn about how these things play into the way that performance can play out, right? This is different from just owning a stock. You're going to make or lose exactly what you know you're going to make or lose with a stock. With options, there are other forces at play here. And this is one great way to sort of play it out. If you want to play something like this in a paper account, just kind of set it up and watch it very closely. Play with the different potential outcomes. You can even vol shock it, right? So, I can say, well, if this thing keeps going up, right? MSTR, I mean, this thing could turn right around on Tuesday. It could be a sell the news, Trump inauguration happens, somebody says something negative uh, or it's just to sell the event, right? We run these things up into the event. Maybe things just kind of collapse on Tuesday. I certainly hope not. I'm up some nice money in this position, but I'm going to let it go because partially I'm sitting on some profits now, right? I'm playing with a little bit of house money, a little bit of house money. I probably should have turned maybe the upside. I should have sold maybe a 520, 530 and created sort of almost a free bit of upside for myself. But what I'd like to see is a further follow through, which I think is going to get us another 5 to 10 points of implied volatility. So again, that Vega, which today is higher, right? So where we are right now, we were 122 Vega when I put this position on in the 360s. Now we're at a 125 Vega. So what's happening? We're starting to get nearer and nearer to that long strike. They're pumping up the volatility, even a little bit more of a Vega bump. So if this thing runs up another $20 and we see another 5 Vega point jump in the volatility, I could make another $600-700 just from the bump in Vega plus the delta. I'm long 35 deltas, make money on that. So I'm going to keep getting torque from different areas, right? And if the vol gets a little bit too high, that's where I might say, you know what, I've got a lot of risk. I originally looked at this position and I said, this makes sense because I think implied volatility is low. What happens when we get up to 430, 440? Implied volatility is pumped. And I feel like continuing to keep a long expression in this particular position. Well, what I can do is I can then go out and say, like this, at that point, I could say, well, I'm going to go in and I'm going to sell like a 540 for, for their $50 right now. But if this stock goes up another $20, I mean, I'm going to get another, I'm going to get maybe $60 out of these, maybe 58, $59 out of these. So I'll sell these for $59. I bought the original 460 for $50. So I'm going to get a nice, $80 call spread for a credit. I'm going to put $8 in my jeans. That's going to pay for the long put, for part of the long put, and I'm going to have a setup that can really, really make me money. And that upside vol has gotten very expensive, so I'm going to hammer out some of that exposure by selling that upper call. I don't sell any calls when the vol is low, right? When the option pricing jams up, that's where might want to take some of that Vega exposure off by hammering out some of those calls at a very high implied volatility, say 30, 40 points higher from where I originally bought my position. And that is effective position management. I'm going to be now hedging out some of the risk that's creeped into this position, right? I had a little bit of Vega risk, but I was willing to live with it. But when this thing goes up 40 vol points, implied vol jumps up 40 points, I'm now going to have a lot of Vega risk, right? This thing could turn around or go quiet. I don't think it will. And suddenly I'm sitting on 140 implied volatility instead of 100. That is much, much more Vega risk than perhaps I'd like to have. So the plan is hammer it out if we get a little bit more of a rally to neutralize a little bit of that Vega effect. If not all of it, I won't neutralize all of it, or really just take the position off. there are a number of ways we can deal with this position. I can roll up some strikes. I can do a bunch of other things that are kind of cool too, which we should talk about next week as we see this position play out. So I hope you guys enjoyed that. A lot of info in there. And make sure you stay tuned. Definitely like and subscribe down below. And check out our newsletter as well. There's going to be some information in the description. And then, of course, we've got our courses, we've got our programs, we've got mentoring, we've got one-on-one, we've got group mentoring, we've got all sorts of cool stuff. I've got a really, really cool ebook coming that starts from the very beginning. It's going to be, I don't know how long it's going to be, maybe 70, 80 pages of just step by step how you do things from the very, very beginning, designed for beginner to intermediate. So a fantastic way to start to learn about some of the things that we're talking about. Of course, some of these things are a little bit more sophisticated, but don't worry, you're going to get there. Keep watching my videos, keep staying interested, keep figuring out what's happening, and then recreate it yourself in your option program, just to kind of follow along and see how this works out. And you'll see before long, you'll be figuring this stuff out very, very well. So we'll see you guys in the next video, and have a great weekend.